the paper today, students? Sarthak, old or new course students? So students, quickly, I think others are joining in. I think in the YouTube also the lectures are on. Students, there is a fast track batch, Smaran batch. This batch is in Hindi. So on this particular batch, students, which is a Hindi batch, we have starting on 15th. You can just tell to all your friends, students who will have appearing for group 2 in the next particular May 22. This is the best batch, a blend of both fast track as well as the regular. वो बोलते हैं ना कि रेगुलर से थोड़ा कम और फास्ट ट्रैक से थोड़ा ज्यादा. This is the batch. So the features are the faculties, Sachin Gupta sir for SCMP, I myself for DT and IDT, Mahesh Gaur sir, plus subscription. These are the benefits: live interactive class, unlimited record lectures, multiple educators for all subjects, doubt solving session, and there are practice mock test series. Some of our achiever students, I think all of you are aware of that. The subscription students, as it goes, generally, you can just tell to your friends about the 3-month subscription for this batch. This should be enough. The 3-month subscription students will be helpful for them. So 3-month subscription, and with that, the code of CADS, don't forget about that code. Ujjwal, good evening. Devya Narayan, good evening. Bilkul Sarthak. This session, students, we are doing it in the YouTube also. So both the things are being happening, and I can see the queries at both the sides. So that is absolutely fine. So students, herein. Now, in this context, there's the iconic students feature, which all of you are aware, flagship program. In this case, students, iconic subscription, which has been there. Apart from the other features, students, this I'll just talk about live mentoring program. Bilkul Raghu, aaj pura karenge. Transfer pricing. Live mentoring program, LMP program, which is there, per one-on-one personalized coaching. Printed book students is also is a hallmark of this particular part. Round good evening. Discord is a dedicated channel. One of the important features is also the evaluated test series, which means 40 marks, 80 marks, and 100 marks. Every paper will have this graded test series, every paper in the group. So this is the best part of this particular part. This is what it is, students, and the rate of this is also very economical. Every group, 12 months, 45,497. And again, if you can put the code CADS, 10% discount has been given to you on this part. Students, with this now we are starting with this particular part. Let's start with our transfer pricing. Students, I will be doing transfer pricing. आप लोगों के लिए एग्जामिनेशन का ऐसा ट्रांसफर प्राइसिंग अभी हम लोग सोच करेंगे कि एग्जामिनेशन डे पे आप सीधा प्रैक्टिस करोगे. Students, 90 minutes is what I'm giving for this particular session. I'm giving students 90 minutes for this session. But अगर थोड़ा 10-15 minutes में if I have to do some, because we will be doing practical problem also in this. So some practical problems students also would be conducted. So 90 minutes is what I'm keeping the target. Yes, Ayush. Yeah, good evening, students. Yeah, Ayush, wo to hoga because obviously the if you see the content are the same. In the 6C then, only hardly few things has to be then referred, which I'll just guide you towards the end of the video. So students, let's start with this one now. Before I start, students, I'm just telling you one more point. If you see, I have already made students non-resident taxation, part A and part B. Students, my humble suggestion to all of you is that at least refer part B. Aaj part B is per se, after this transfer pricing is over. If you haven't referred part A or part B, then my suggestion would be at least refer one part tonight. Agar ho sake after transfer pricing, agar ho sake to refer kar lena one part. 2 parts are there. Okay? And yeah, question solving is also there. Shreya would be done. We will be doing both. It's not only theory, along with that, question solving also is there. So students, one part, 90 minutes ka agar ho sake to dekh lena. At least one part of non-resident taxation. If possible, just go through that. If possible, students. So that the load on that DT day would be less. On the direct tax day, I'm doing a marathon session, TDS, TCS, advanced tax, three in that 2 hours period, I will finish that first. After ISKA paper, special class. Link again, I'm just going to give it to you. TDS, TCS, advanced tax, first in 2 hours. Let's start with this one, students. Students, now the question on transfer pricing. Yes, बिल्कुल कोई चिंता नहीं, वो मिल जाएगा आपको. आप इसका टेंशन ना लें, पेपर सबका खराब हुआ है so far as the costing is concerned. ठीक है, तो आप टेंशन मत लो. Students, just you have to be reasonable. DT में you can score good marks this time. Paper should be fine. Let's hope for the best, students. पहले ध्यान रखना students, 92A on the international transaction, students. The first question that could be expected in the examination could be on the basic part. 92A, which is associated enterprise, and 92B, which is about the deemed international transaction. Deemed international transaction, students. So ये दो areas है. There are two areas which you have to be very careful. 92 and 92B and plus 94A, students. Are you aware of 94A? Can anyone tell me quickly what is this 94A? So the first one is a basic part. Student, इसको basic लिखना, and plus last but not the least, SDT, the specified domestic transaction. So इसको मैंने first basic का मैंने category दे रखा है. इसमें से क्या questions पूछेंगे examination में? Let's try to go through them one by one. From this, what are the questions that they are going to target? Let's have a look quickly one by one. In the context of students' international transaction or associated enterprise, the question can be, obviously, they do a mix-up as to whether the AE, can they be considered as, whether that person, can it be considered to be an associate enterprise? One of the very popular thing would be about the guarantors. Students, just be very careful on that. I've seen many questions, students, in your examination wherein guarantor दिया है उन्होंने. Guarantor को किसके साथ compare करना in one of the MCQ. Students, please pay attention. I'm discussing MCQs also quickly on this regard. In one of the MCQ, the ICA very cleverly has not only given the total borrowings, but also they have given, students. In one of the MCQ, they have not only given the total borrowings, but also, students, they have given what? Apart from total borrowings, they have given you the total asset of that borrowing company. दोनों चीज दिया है. They have given total borrowings as well as the total asset. So please understand, this is a confusion. Why it is a confusion? Because when you talk about guarantor, students, the guarantor will have to be compared with the total borrowing. So if a guarantor has guaranteed your loan, which is 10%, which is minimum 10% of your total borrowing. If a guarantor has guaranteed your loan, has become the guarantor to your loan, which is 10% of your total borrowing, then whether the guarantor and you, the borrower, both of them, can they be considered to be the associated enterprise? Both of them, can they be considered to be the associated enterprise? And the answer is yes. Answer is yes. अब इसका जरा twist देखो students. Just see the twist over here. In the examination, these people are also giving you the total asset information, but you should be smart enough. This total asset information, students, are meant only when you have to compare whether the AE and that non-resident other person, both of them, are they having lender-borrower relationship? So substantial lender is what needs to be looked upon at that point of time. Now, if you see the substantial lender, students, how do we go about it? In the case of substantial lender would mean that the loan value should constitute 51% of the total asset of the borrower. So whatever the loan which I have taken, if my loan which I have taken from you means the non-resident AE, if that loan amount constitute 51% of my total asset, so the loan which I have taken from you are the non-resident, if that loan amount is 51% of my total borrowing, then both of us will become an associate enterprise. Both of us will become an associate enterprise. So do you know? Please read the question very carefully. Only this is the part which you have to be very careful about it. Borrowings, they will talk about guarantor. If they are talking about guarantor, then you don't have to see the total asset. They don't have to see the information relating to total asset. When they talk about guarantor, the relevant information is that I have become the guarantor to your loan amount to the extent of at least 10% of your total borrowing. To the extent of at least 10% of your total borrowing. Is that clear to all of you, students? All of you are clear with this one, students? And that exactly is the point. Rest of it are easy. Don't worry about it. Family, आप अगर याद अगर पढ़ोगे भी नहीं चल जाएगा. Because I think all of you are aware, like half of the board of director, minimum 20% voting power, isn't it? Thereafter, the mutual holdings. ये सब पूछेंगे नहीं. This is one of the attempt that they have appointment of the board. Appointment of the board, students. If I appoint more than half of the board of directors, more than half, students, then in that particular case, students, this is what we will say, that both of them can then be considered to be an associate enterprise. Just only focus on one part, students. What is that? Loan, guarantor, and the total asset. If you are checking for guarantor to become an associate enterprise, the other factor to be considered would be what? Whether it would be total asset or total borrowing. Total asset of the borrower or the total borrowing of the borrower. It is the total borrowing of the borrower. I hope that all of you are clear. But if you are talking from the substantial lender point of view, then the other information would not be the total borrowing, but it will be the total asset. Is that clear to all of you, students? Clear to all of you? Let's then proceed. So in the definition of associate enterprise, students, only this is what is required. You can say, sir, can you just quickly run through other things? Yes. Supply dependency. Raw material ka information in the examination, they can give it to you. That look, I'm procuring my raw material from a non-resident, and that raw material procurement is to the extent of 90% of my total raw material consumables. 90%. In that case, whether both of us will be considered to be an associate enterprise, and the answer is yes. Is that clear to all of you, students? I think this much is sufficient. This is a definition of an associate enterprise. Students, one point which I just wanted to share with you, 10 seconds. If they have given you this information, see, one thing is for sure, 10 marks, approximately 8 to 10 marks will be from transfer pricing. All of you agree to this one? If they give you this information, the ICI is expecting you that in your first point, you need to write that the two entities are associated enterprise under section 92A because of this particular reason. Students, you need to write this particular point. This has to be a point number 1. And then what would be your point number 2? The point number 2, students, you all are aware, would be a simple one. And what would be this particular point number 2, which is a simpler one, students, would be that the transaction is an international transaction, and accordingly the ALP shall be determined as per whichever method that you have to talk about it, as per the question. So methods diye rahenge question mein, you have to just make reference of that ALP would be determined as per this particular method. Fine. Okay, students, I'll come to specified. I will come to SDT. SDT this time is very important. Mark this to be most likely. This could come in the examination. I'm talking right now to all of you. Thank me later if it comes in the examination. SDT, specified domestic transaction. But before I do specified domestic transaction, student, this part I have seen in the MCQ. One of the MCQ I have seen, and that MCQ was a negative MCQ, and that negative MCQ was that tell us, and in which case the entities are not an associated enterprise. So there were some MCQ based question, and they have said that in which particular case the entities will not be considered as an associated enterprise. Students, be very careful in this particular context of a deemed international transaction. Here what happens is that there is an Indian AE. Students, there is an Indian AE, and then there is a non-resident AE. Okay, and then there is a non-resident AE. Please pay attention, students. Between Indian AE and non-resident AE, if they do the direct transaction, then the transfer pricing provision is applicable. Yes, it is applicable. But what if between both of them, if I put a unrelated party, now in the examination, you have to search one word. Is there a prior agreement? Students, please search this word in the examination and just find it out. Is there a prior agreement between the Indian AE with the unrelated party? As per that agreement, the product would be sold to that unrelated party at a particular price. The product would be sold to the unrelated party at a particular price, and thereafter the unrelated party will sell to my AE at X plus 1, whatever be, and that is a predetermined price. So is there a prior agreement? If you say that, yes, sir, there is a prior agreement. If there is a prior agreement, then this is a deemed international transaction. Deemed international transaction. In which case, students, do you know what has happened? This entity and this entity, both of them are A. Both of them are A. So in that ICA MCQ, I've seen, in fact, which was what? Which was what they have given you, that under what particular case the SSC will not be considered as an A, will not be considered as an A. And many students are not aware of this combination. And therefore, many students answer that look, he is doing the transaction with an unrelated party. And because he is doing a transaction with an unrelated party, therefore, in that case, they are not an associated enterprise, and hence the transfer pricing provision will not be applicable. This is an incorrect answer. You have to see if the transaction is done with an unrelated party, but if it is out of a predetermined agreement, if there is already an agreement in place, and in consequence of that agreement that the that the transaction has been undertaken, then you will say, students, then you will say what? Then you will say that both the SSC as well as the unrelated party, both of them will be considered as an associated enterprise. This was your ICA MCQ. Congratulations, students. Expect all these things in your examination now. Now, specify domestic transaction, students, directly, as you all are aware. First, the provision itself. Students, you have to focus here. Specify domestic transaction. Let's do the practical questions on this part, because obviously you will be getting a practical question on the SDT. Students, you have to be very careful about this one. SDT part, students, be very careful on this particular part. Shall we proceed, students, on this one, SDT? Students, in SDT, you have to see the aggregate transaction value. This is what you need to focus on. Not the ALP, but the transaction value. Transaction value between whom? Students, transaction between ATIA unit and non-ATIA unit. ATIA and non-ATIA unit. You have to see the transaction between them. Okay. Which ATIA, when I say ATIA, what I mean essentially is the profit link deduction entity with a non-profit link deduction entity. And secondly, students, be careful. Secondly, in this case, if an entity is taking a 35 AD deduction, then in that case, also the same proposition will arise. What is the same proposition? 35 AD entity with another entity which is not taking a 35 AD deduction. So if there is a transaction between both of them, then in that situation, students, just check the transaction value. In the examination question, please check the transaction value. Don't check ALP. The students make a mistake in this SDT. They check the ALP information. No, that is only to confuse you. You have to see the transaction value. So the transaction value, where, like for example, non-ATI unit of the SSC, A Limited is SSC, its non-ATI unit has supplied or transferred the goods to ATIA unit at a price of rupees 19 crores. At a price of rupees 19 crores, whereas the arm's length price is 28 crores. Please comment on this one now. Non-ATI unit of A Limited has transferred the product at rupees 19 crores, whereas the ALP of the transaction is 28 crores. What do you think of it? Will this be considered as a specified domestic transaction? In this particular example, will this be considered as a specified domestic transaction or not, students? To that, the answer is, be careful, students. Answer is no. This will not be considered as an SDT. You will be tempted to say yes. There will be an inherent temptation on all of your part to say that yes, it is a. Don't get into that trap. This is not an SDT. You will say, sir, if it is not an SDT, then in that case, students, you have to focus on the fair market value. You will have to go with the FMV value and not the ALP value. Is that clear to all of you? So therefore, but if this would have been, say, 21 crore, if the transaction value would have been 21 crores, then congratulations, students, this is a SDT, in which case the ALP so determined, will be considered, and the difference ALP so determined will be considered, and accordingly the transfer pricing adjustment will be made. Now, just quickly run through this question, students. We'll do one questions. Again, I expect in the examination MCQ based question on this. MCQ based question. Let's have a look. Students, all of you will read this question carefully. Just read it. It will take you hardly 30 seconds. Students, always herein is the ATIA, non-ATIA. So non-ATIA here, they have sold, and ATIA is doing a purchase. Isn't it that the case? Non-ATIA has sold, transfers the goods to S1. So they have sold it at what price, students? For 80 crores. 80 crores. This is what you need to see. Now, 80 crores is a game for all of you. Why it is a game for all of you? Because by virtue of this 80 crores, you will decide whether it will be, the ALP would be considered or not. So students, whether this will be considered, and the answer is yes. 80 crores is what you will then consider in this particular case, students. 80 crores is what you are going to consider in this case. So students, 80 crores, I will consider it. Then I will see, okay, thereafter ATI unit. So it's a specified domestic transaction. Can we say this to be a specified domestic transaction? Yes. Then it is purchasing 80 crores. Now, students, there's a deliberate attempt to suppress the sale, even if the profit of the ATIA will increase. Then it will not, Siddhesh, it will not be SDT. So there is a deliberate attempt to suppress the sales by non-ATI unit, even if the profit of the ATIA will increase. Even if the profit of the ATIA will increase, isn't it? But if the profit of the ATIA will increase, that will be compensated by the profit link deduction. So what they will do, students, here, the arm's length price is 120 crores. Sorry, arm's length price is how much? Market value is 100 crores. So your sales should have been 100 over here. The sales should have been 100. Your purchase should have been 100 over here. So technically speaking, your sales should have been 100 in this context. So by having this one, students, what we will say, there is a 20 adjustment, the suppression of the sales that has taken place in this. Or may I say, how much deduction, how much is the higher deduction they have claimed? How much higher deduction that they have claimed, students, in this case? Higher deduction is, obviously the profit would be higher than 20 crores. The profit, can I say the profit would be higher than 20 crores? Can I say that the profit of ATIA unit is higher than 20 crores? And because of that reason, they are claiming a higher deduction. Can I say that way? And the answer is yes. So in this particular case, I need to add back this transfer pricing adjustment of 20 has to be done. Now, please pay attention. ICI is very clever in asking you the questions in the examination. This 20 crores can be said as suppression of sales. And because of the suppression of sales by this non-ATI unit, that I am doing this particular adjustment. That is the reason number one. Or what, students? Or here, students, can you see this over here? That because of lower purchase, the profit was on higher side. Because of lower purchase, the profit was on higher side. And since the profit was on higher side, students, since the profit was on the higher side, what is that we will say? We will say that because the profit was on the higher side, hence there is an excess deduction that was being claimed. And how much is the excess deduction? Excess deduction is 20. And that can also be considered as a reason for the transfer pricing adjustment, because these people are very smart to play with the words. You have to be very careful in this case. So this 20 additions could be attributable to suppression of sales. I can say that is also one of the reasons. Or the other reason is that because I have reported, the ATIA unit has reported in the original transaction with its non-ATI unit They have reported a higher profit of 20 crores. Because of the higher profit of 20 crores, there was a resultant higher reduction of 20 crores. And because there was a resultant higher reduction of 20 crores, therefore, transfer pricing adjustment of 20 crores is required. I hope that all of you are clear with this one, students, now. The last but not the least is NJ. Now, students, in NJ, chances are very less, but people are asking question very intelligently. When I say people are, you know who's that people? ICI. Students, NJA, first of all, I think all of you are aware of the consequence. Just have a look to the consequence. I'll just run through the consequence and I'll take you through to the relevant questions in the whatever has to be done. First of all, the entity and you. Entity in the NJ and you will be deemed to be an associate enterprise. Isn't it? And the transaction would be deemed to be an international transaction. So this is given. Now, disallowance of the payment made to the financial institution. If there is a financial institution to whom in the NJ to whom you are making the payment, then that particular interest will be disallowed. Unless you, in fact, give the full information of the financial information of that financial information of that institution which is located in the NJ. Disallowance of the other expenses arising from the transaction which is person located in the NJ. Disallowance of what? Other expenses. Now, if you see over here, amount received or credited from NJ will be deemed as income if what? If the assessee does not provide explanation for source of income. Now, this is fine. This they will not target, but this is the most important part. This is the most important part. TDS at a higher rate. Now, we all are aware that the TDS would be 30%. Fine. Now, one question, students, ICI somehow is asking it very frequently, and I've seen at 2 or 3 places this kind of a question made by the ICI. This question, students. See this particular question on NJ, whether TDS is required to be deducted. Whether TDS is required to be deducted, a notified infrastructure debt fund eligible for exemption in 1047 of the Income Tax Act pays interest of rupees 5 lakhs to a company incorporated in USA. The US company incurred an expenditure of 12,000 for earning such interest. The fund also pays interest of 3 lakhs to Mr. X, who is a resident of NJ. Now, students, I think you all are aware there is already an MCQ question of this. MCQ question of this is already there given by the ICI. Now, in this context, we all are aware there is a 5% rate which is there because you are talking about the notified infrastructure debt fund. So 5% is the rate of 5% is the income tax rate, which effectively is also the TDS rate. 5% is the income tax rate, which effectively is also the TDS rate under section 194 LB. Okay. So in that case, this is a scenario. But so this is a tax rate, and the other one is this is a TDS rate. However, if you are an NJA, then although your tax rate, if you are an NJA students, although your tax rate will be at 5%, but your TDS rate would be at 30%. Keep this point in mind, students. If you are an NJA, then although your tax rate would be at 5%, but your TDS rate would be at 30% plus the HEC and all will be loaded for that. That is true. You have to be extremely very careful on this particular part. So the TDS rate would be 30% plus this thing, although your tax rate will continue to be at 5%. Is that clear to all of you? Is that clear to all of you? So therefore, this is one thing that you have to be extremely careful on this particular part. Now, Rupee denominated bond. Are you aware of Rupee denominated bond issued in September 2018 August 2018, if I'm not mistaken, or September 2018 to 31st March 2019? The Rupee denominated bond which is issued during this period. The Rupee denominated bond which is issued during this period. Are you aware of the consequence? What happens in this case? What happens? Any Rupee denominated bond issued by an Indian company during this particular period, what happens in this case? Then, in that case, there is an exemption under section 10(4)(c). Exemption under section 10(4)(c). So, although the tax is exempt, but whether the TDS, if the Rupee denominated bond is issued to a company or any investor which is situated in NJA, the Rupee denominated bond is issued to a company or an investor who is situated in NJA, question to all of you therefore is whether I need to deduct the TDS. I need to deduct the TDS even if the tax is exempt, Why the tax is exempt? Because it has been issued during this period. So there is an exemption in the 10(4)(c). Whether the TDS still will be applicable, and the answer is yes. The rate of TDS is higher of the following three. Can you see that? It is higher of the following three. Rate specified under the Act is nil. TDS rate is 30%. Rate enforced means the DTAA rate would be considered. So therefore, nil rate is a lower rate, but 30%. Everything is compared, and whatever is higher. And what is higher should 30%. 30% rate would be there. Even though the income tax rate would be nil. Even though the income tax rate would be nil. Is that clear to all of you, students? So I hope that all of you are clear with this particular proposition, students. And that exactly the point. Now, students, out of the method, this time, students, methods of determining the ALP is important. Methods of determining the ALP is important, students. The cup method is the simplest of the method. Students, the cup method is the simplest of the method. I'm not touching upon to this cup method. Okay, by the way, students, one point which is there. Many students are asking about the safe harbor rule. Safe harbor rule, is it applicable to all of you in your examination of your attempt? And the answer is no, don't worry about it. Safe harbor rule, students, will not be there, shouldn't be there. Okay, so those who haven't done it, so don't worry much on that one now. Okay, this is not the time for safe harbor rule. But at least you should be aware of this sort of a question. Students, if supposingly the transaction has been undertaken with the entity in the non-notified jurisdictional area, which transaction? The transaction to which the safe harbor rule has been notified. The transaction to which the safe harbor rule has been notified, students. So if a transaction has been undertaken with an entity which is located in the NJA, question therefore to all of you is whether in that case safe harbor rule will continue to be applicable in this regard. Safe harbor rule, will it be continued to be made there applicable? And the answer is no. Just you need to remember all these things on the safe harbor rule. Fine, students. Shall I proceed now? Let's proceed further. Students, now in this case, by the way, for specified domestic transaction, please tell me, SDT, whether safe harbor rule, is it applicable? For the specified domestic transaction, whether the safe harbor rule, will it be applicable or not? For specified domestic transaction, whether the APA, will it be applicable or not? See, so students, for specified domestic transaction, safe harbor rule is applicable, but APA is not applicable. Always keep a note of all these things. These are the things only which are going to bother to all of you. Are you getting this one? SDT, for specified domestic transaction, you will say that the international, the safe harbor rule is applicable, but APA is not applicable. I hope that this point is well taken by all of you. Now let's come to the methods of determining the ALP, students. In the case of the methods of determining the ALP, students, the simplest method is a cup method. I will just leave you with one particular part from the cup method is this question. Chetan. Now, by the way, I will just put the PDF file in my Telegram channel, CA Durgesh Singh. So you can just go through to the Telegram channel and get this particular PDF, which has been there. Now, students, the simplest method is the cup method, which I'm not keen to do it right now. Okay, so one question which has been there, you can just do this particular question. I will not tell you how to do the calculation part of it. It's a simple one. But other question was something which I got interested with. So I just wanted to discuss with you some other question which is theoretical in nature. ICI is, you may be aware that ICI keeps asking this kind of a question. Please, this is a homework for you. Immediately after the lecture gets over, ensure to do this one because it's a simple one. So compute the ALP transaction and adjustment to be made to the income of Chetan Limited. This is the cup method. On that basis, you will just deal with it. The next one, student. What is the due date for Chetan Private Limited for furnishing audit report on third under section 92E? What are the due date, students, to furnish the audit report? What is the due date to furnish the audit report? What is the due date to file the return of income? This is what was expected from one of you students. This is what was expected from all of you. 30th of November. That is the due date for return of income. All the due date, students, now has become 1 month prior to the due date of filing of the ROI for whatever is the audit report. This is the reason why this one procedural part was very critical. Any audit report, in any section that they will ask you, always all the report, anything, but if it is a report, a month before the due date of filing of the ROI. I hope that this point you should not make a mistake on the examination. What on point number 3? If the transfer pricing officer has enhanced the income of Chetan Private Limited by rupees 2 crores, will that enhanced amount of income be eligible for deduction at 10AA? Will it consequentially, students, will it expand this income? And the answer is no. And the answer is no. Students, on this part, I will just discuss one more particular point. Students, if my income has been enhanced, please take a note of it. Now you just need to listen it and ensure that you retain on the day of the examination, you will retain it. But just listen to it very carefully. Because thanks to ICM, an MCQ is already there. Students, therefore, if my income is enhanced because of the adoption of the ALP, I will not be getting a consequential deduction of 10AA. I will not be getting a consequential deduction of 10AA. That is point number 1. Coming to point number 2. Students, coming to point number 2. If what, students? If the SSC, in this context, be careful of what I'm saying. If the SSC, herein, if the SSC, if the SSC income is enhanced by adoption of the ALP, then whether the brought forward business loss or the UAD, will that be adjusted? If the SSC's income is enhanced because of the adoption of ALP, then whether the brought forward business loss or the UAD, will that be adjusted is the question in your examination. Because this was your MCQ raised by the ICI. Again to that the answer is no. Again to that the answer is no. Any brought forward business loss or UAD will not be adjusted against. Will not be adjusted against. Against what, students? Against this particular. Exactly. Against this particular amount which got increased on account of the adoption of the ALP. Amount which got increased on account of the adoption of the ALP. I hope that this point is well taken by all of you. Fine, students. So this is how the things has to be looked upon. Now coming to the other particular aspect, students, this question. Students, in the case of a resale price method, students, just keep in mind this part. Resale price method. Students, in the resale price method, what happens is that you will compute the normal margin first. Normal margin. Now, how you will get the normal margin? You will that normal margin will be considered from the unrelated party transaction. From the unrelated party, you will get the normal margin. Now, how this normal margin would be there? Whatever is their reselling price, you will compare it with the cost, and then you'll get the normal margin. And from this normal margin, you will do the adjustment of what? The uncommon factors. Adjustment relating to the uncommon factors, students. Sorry. You will not about this one. Now, once you get the normal margin, students, the next previous step would be that this normal margin. You will reduce from the resale price. Resale price of what? Resale price of your Indian A. From your Indian A, whatever is the resale price, you will adjust it this one. Resale price of the Indian A, students. So the normal margin, you will reduce it with the resale price of the Indian A, and thereafter, students, this could be considered as the ALP. Students, chances are there the ICI will stop over here. But only one fear is there, that if the unrelated party and the unrelated party transaction and the transaction between the AE, if there are some uncommon factor adjustment, then the uncommon factor adjustment will take place over here. Uncommon factor adjustment, always keep a note of it, truth. Uncommon factor adjustment will take place over here. Uncommon factor adjustment after they have arrived at this price. That is after the normal margin has been reduced from the resale price the resale price of the Indian AE. From that, all the uncommon factors would be adjusted, and that adjusted amount will be the arm's length price, which will be compared with the purchase price which the Indian AE has incurred from the non-resident AE. The purchase price, because obviously you are purchasing and then you are reselling. So yours is a case of a purchase, isn't it? Yours is the case of a purchase. So it's a purchase that will be compared with the arm's length price which you have just computed, and that is what it would be. 99%, 99.99% students, they will not ask you in the examination this uncommon factor when it comes to resale price method. But you have to be careful about this 1%, 0.1% chance. And if it is there, then please be careful. In the resale price method, the uncommon factor adjustment is taken after the normal margin is reduced from what, students? The normal margin is reduced from the resale price of the Indian AE. I hope that this point is well clear to all of you. Now, on this backdrop, students, on this backdrop, there is one question which has been there. Bharat Cell Phones Limited of Mumbai and Japan Mobiles Limited JML of Tokyo are associated enterprise. BCL imported 10,000 mobile handsets for JML for rupees 15,000 per handset, which were sold to unrelated party. So I am importing from my AE and I am reselling it for rupees 20,000. So this is my resale price. So be careful. This is my resale price. What is my transfer price? Transfer price, students, that is the import price, because this is what will be compared with the ALP, 15,000. My resale price is 20,000. From this, on this resale price, I'm going to reduce my normal margin. BCL imported similar mobile handset from Europe Limited of London, which was sold 25% on the cost, students. So this becomes what, students? This becomes my normal margin, isn't it? Now see, this is the game. JML offered quantity discount at 2,000 rupees per unit, whereas EL offered quantity discount at 800 per unit as quantity discount. The freight and custom duty, can you see that, all that, students? The freight and custom duty of import from EL has cost of 1,500 per unit. In respect of purchase from JML, the expenditure towards freight and custom duty was 500 per unit. So students, what is this all about, by the way? What is this? This is all the uncommon factor. And what did I told you, students? What did I told you? I have told you that if there is any, this is the only question. And why I'm so much focusing? Because, students, this is a CMA question. This is your CMA question, recent CMA question. And ICI will have an eye on this. So just keep an eye on this, because the ICI haven't asked resale price method up till now. And this is a recent CMA question, so you have to be very careful. Unless it comes to the ego of the ICI, that's a different thing. So students, what is the first step? First step I told you, from the resale price of the Indian AE, normal margin has to be reduced. I have calculated normal margin. What is normal margin? 20% of selling price. How come 20% of selling price? They've given 25% on cost. So 1/4 on cost means what? 1/5 on sale. 1/4 on cost will mean what? 1/5 on sale. So this is where you can go wrong. Also, one step is this, that you can go wrong. So your resale price is 20,000. So this is on sale. So I want the normal margin. Please be careful, students. One thing, just pay attention. In the resale price method, the normal margin that you require, students, be careful. The normal margin that you require is always a percentage of sale, whereas in the cost plus method, students, you require this as percentage of cost. So there would be a lot of this sort of adjustment that may be required, because like in this question, they have given you the normal margin as a percentage of cost, which is 25% of cost, which is the normal margin sold to unrelated party. But I want normal margin not as a percentage of cost, but as a percentage of selling price. So 1/4 on cost would be 1/5 on sale. So 20,000 is a selling price. 1/5 of that is 1/5 of 20 is 4,000. That is what will be reduced. And thereafter, I could have said this to be ALP, but there are these uncommon adjustments. Now, see, there is a quantity discount which has been there. Now, please pay attention here. What are these things? Students, please pay attention, all of you. JML, who is JML? JML is by A. So JML offered quality discount of 2000 per unit, whereas non-AE is offering only to 800 per unit. So it implies that in my purchase, students, in my purchase, the quantity discount is higher. So my purchase would be on the lower side. My means, when I'm saying my, it means with my A. When I'm saying my, it means with my A. So in that particular case, when I'm doing the purchase with my A, it's 2000 rupees per unit. And accordingly, students, my purchase would be lower because the discount is heavy as compared to purchase with the non-related party where it is at 800. Discount is not that heavy. So I need to do what? I need to give extra discount on that unrelated party price. Extra discount on that unrelated party price. And students, can you see that? The extra discount on the unrelated party price comes to how much? 800. Sorry, 1200. So the 1200 extra discount has to be given. So I need to reduce the ALP further by 1200. Similarly, students, there are some other extra purchase related expenditure. Can you see that, students? The freight and customs duty paid for import from EL has 1500 per unit. So the purchase is on a higher side when it comes to unrelated party. So here the price is loaded with 1500. Here the price is loaded, students, with 1500, isn't it? Here the margin is loaded with 1500. So therefore, students, with the margin loaded with 1500, whereas in fact the loading should be only at 500. The loading should have been only at 500. So by 1500, students, whatever is the price which has been there, here in 1500 is the loading which has been there in this regard, students. What does it imply? It implies is that the margin would be less. Just think logically, students, over here. I am purchasing at 1500. Here in the loading is 1500 on the import from the non-A. So with a 15, so here what will happen, students? In this context, here the normal margin which has been there, the impact on this one, students, and whereas in the context of this one is only 500. With a 1500 loading, which is on the purchase, 1500 is on purchase, by the way, students. By the way, 1500 is on the purchase price. So my purchase would have gone up. My purchase would have gone up. 1500 is my this thing, no? So my import price has gone up. Import price would have gone up means my margin would have gone down. Margin would have gone down because this would be compared with my sales. So my margin is less. If my margin is less, students, then in that case, I would have reduced less amount. So 4000 which I've reduced is actually a less amount reduction because the margin is less. The normal margin which I've reduced is a less amount. And accordingly, if it is a less amount, then in that case, I should have reduced further. How much further? Because my margin should be on a higher side. How much further I should have reduced, students? I should have reduced by taking 500. So the difference here is 1000. So 1000 is the further reduction that needs to be done. 1000 is the further reduction that needs to be done. Where it is? 1000 is the further reduction that needs to be done. So please understand this is how the things has to be looked upon. I hope that all of you have understood this adjustment. If you want, I will explain it one more time. But I think if they will have to ask, they will ask you only this particular thing. In this context, students, in this context, again, I'm repeating this particular point for all of you. Purchase is at 1500. Purchase is 1500 higher. Purchase is 1500 higher. As compared to the non-A transaction, the purchase is 1500 higher. Non-A transaction, the purchase is 1500 higher. So it implies my margin, which is selling price and the cost price. The selling price and the cost price. It means that this margin which I'm going to reduce, students, the margin which I am going to reduce, this margin would be on a higher side or on the lower side. Obviously, my margin would go less. If my margin will go less, so I have reduced lesser amount. This 4,000 is a lesser amount reduction. It implies that this 4,000 is a lesser. It should have been reduced more. I should have reduced more because my margin should have been more. So if margin should have been more, then the reduction would have been more. But here the margin was less, so I have reduced only 4,000. So how much more I should have reduced? How much more I should have reduced? The difference. And the difference is how much? 1,000. Okay, friends. So this is all the things has to be considered. So with this, students, we have done with this. The ALP would be considered over here. ALP would be considered over here, and thereafter make the comparison. Students, make the comparison. How you will make the comparison? Price at which it is actually bought by JML, 15,000, less the arm's length here in 13,800. Okay, so therefore my purchase price was 15,000. How much should have been the purchase price? How much should have been the purchase price? Not 15,000. Your purchase price should have been 13,800. So per unit is 1,200. Number of unit this. Please always keep in mind there should not be any way of a downward adjustment, students. There should not be any way of the downward adjustment. Did you all got this one? What do you mean by downward adjustment? That if supposing in the same question, instead of 13,800, if this would have been 22,000 then, or 20,000 then, if this price would have been 20,000, then your purchase is at 15, whereas the purchase that they are demanding should have been at 20. So it means that I have reported a lower purchase. Reporting a lower purchase means higher profit. Higher profit means more tax. Is that clear to all of you? So this is how the things would be considered, students, in this regard. I hope that all of you are clear with this one now. No doubt whatsoever. This is the past ICI question, students. So I don't feel that they will ask you this question, but still, you have to be careful about this question also. But this is one extra question. So this is a new question of the CMA, which you will just be very careful about this, the resale price method that we did. This Amar Limited, students, is a case of the cost plus method. Very quickly, we will run through this question also. The cost plus method. In this case, Amar Private Limited, Bangalore is engaged in IT-enabled service. It is a subsidiary of ABC Inc. in US. It also provides similar services to a company SAK Limited at Singapore. Its billing and other information is given here as under. Billing per month, ABC $85 to SAK. SAK is your unrelated party. Unrelated party, to them, it is at $70,000, students. Yes, Vijay. Now, in this context, if you see over here, students, in this context, so your billing to your AE is at 85,000, whereas SAK, here SAK, which is a Singapore company, unrelated party, it is at 70,000. Let's see the further data, students. ABC has provided a loan of $1 lakh. Now, in the cost plus method, now this is a cost plus method, by the way. Students, as far as the cost plus method is concerned, the ALP that has to be determined has to be direct plus indirect cost in the AE transaction plus the adjusted markup percentage. Markup percentage. Students, please pay attention again. I'm repeating. The ALP that has to be determined is like this. In the cost plus method, direct plus indirect cost in the AE transaction plus the adjusted markup. Now, again, I'm repeating this one, students. This adjusted markup percentage that you will determine over here will be the percentage on the cost, because you are doing a cost plus method. You are doing what? The cost plus method. Now, in this context, students, please pay attention. This plus is the markup. First, students, you will take up the markup of your unrelated party transaction. The markup that you have to take, students, has to be taken from the unrelated party transaction. And from that markup, you need to make the adjustment relating to the uncommon factor. The adjustment relating to the uncommon factor. So let's have a look to what is that particular adjustment relating to the uncommon factor. We'll quickly run through the same. Friends, if you all can go through this one quickly. Here, what we all get here is point number C. Please pay attention. ABC has provided a loan of $1 lakh to Amar Private Limited towards purchase of hardware for executing its project. Rate of interest charge for the said loan is 3% per annum. So students, here ABC Inc. dot is providing a loan. So now providing a loan adds up to the financing cost. Adds up to the financing cost. Because please pay attention. Here it has been given to Amar. So the Indian AE total cost has to be computed. The Indian AE total cost has to be computed in the international transaction. So the total cost will comprise of all the cost, direct cost, indirect cost, and all the cost which are being there. So whether this is also a cost in processing the international transaction, and the answer is yes. With your AE, again the answer is yes. So therefore, this is also a part of your total cost with the this is also the part of the total cost in the international transaction with your AE. In the international transaction with your AE. And therefore, students, in this particular case, therefore, what is that we are going to say? We shall say that here $1 lakh plus 3% per annum being the financing cost will be added to determine the total cost in the A transaction. To determine the total cost in the A transaction. Please come to the next one. Point number D. Direct and indirect cost incurred are $100 and $200 per hour respectively. So this also will be a part of your total cost. Both the direct as well as the indirect cost will also be a part of your total cost. Do you all agree to this one, friends? Do you all agree to this one, friends? And the answer is yes. But please understand over here, see, the nature of the question is such that they have given you this as a standard cost. Students, the nature of question is this is just like a standard cost. Direct and indirect cost are 100 and 200 rupees per hour. What does it imply? That you now need to only know what is the number of hours. By virtue of the knowledge of number of hours, you will be in a position to know what is the total cost, both direct and indirect, isn't it? And that exactly is the point, so you just be very careful on this part. Point number E. Amar Private Limited works 9 hours per day for 15 days to execute the project for ABC and 8 hours. By virtue of this, students, what you will do, the standard cost. Now, please understand this standard cost. This standard cost you will apply and you will get what? The direct and indirect cost in the A transaction. Plus, to that, you will add what, students? You will add the financing cost. That will give you the total cost in the A transaction. And in that total cost in the A transaction, you are going to add the markup. First, which markup that you will take? The markup that you are going to take would be the markup of the unrelated party transaction. And that markup that you have got in the unrelated party transaction, you will try to adjust it. What did I write in that markup? I have written only markup or adjusted markup. I have written, students, adjusted markup. So that markup would be adjusted with what? With the uncommon factors. The markup would be adjusted with the uncommon factors, isn't it? And therefore, if you see point number E, students, very carefully, what does we get over here? So here, students, if you all see, point number F, students, point number F, warranty was provided to SAK Limited for a period of 2 years. Cost of warranty is calculated at 1% of the direct cost incurred. The cost of warranty is neither included in direct or nor indirect cost. Why it is not included? Now, please pay attention, students. Can anyone tell me why is it that the cost of the warranty is not included in the direct nor it is included in the indirect cost? Why is it that the warranty isn't included in both the direct as well as in the indirect cost? There is a reason behind that, students. The reason is this, that this warranty is the extra factor over and above what? Over and above the standard cost. Please understand the cost that they've given to you is a standard cost. Warranty is something which is extra to a particular transaction. Extra that is there in this transaction. So if you all see here, in the case of the transaction with SAK is an unrelated party, by the way. In the unrelated party transaction, there is a warranty which has been given. Now, please pay attention, students. Warranty is a cost. So, unrelated party has got warranty. Please pay attention. Now, all of you, this is an important stage. In a related party transaction, the transaction is at X warranty. The transaction is at X warranty. And in the unrelated party transaction, the transaction is at cum warranty. The transaction is at come warranty. Now you tell me, students, X warranty versus come warranty. X warranty versus come warranty, students. You only have to tell me in this case that whether now what I need to do. What I need to do, should I have to bring from X warranty to come warranty, or I have to bring from come warranty to X warranty? X to come or come to X? What I need to do? My related party transaction is at X warranty. This is the SA transaction with SAK Limited. SAK Limited is the unrelated party. In that, there is a warranty which has been loaded. In that, there is a warranty which is loaded. So therefore, the question to all of you is, in this context, what I need to now do? What kind of adjustment is expected in determining my adjusted markup? Should I be bringing X warranty to come warranty, or should I be doing reverse? That is from come warranty to X warranty. X to come or come to X? X to come or come to X. What is that I need to do, students? I need to get the margin, students, because the unrelated party margin which I'm getting it, this margin, students, would be at come warranty. At come warranty, I need to bring it down to X warranty. How do I do that? How do I get into bringing it to X warranty? This is this is a beautiful adjustment, students. This adjustment. Please pay attention here. Students, they have given you warranty as a percentage of what? 1% of the direct cost incurred. Warranty, students, would be loaded in the selling price. In this $70,000, what do you think? Warranty has been loaded in the selling price. Do you think in this case, SAK Limited, the price, will it be X warranty or come warranty? Come warranty. With the related party transaction, that is SAK Limited, it is come warranty. So the warranty would be loaded in the price. Whether the warranty is loaded in the cost, that is in point number D, 100 and 200 per hour. Whether the warranty is loaded in the cost, and the answer is no. They have already given, no? Warranty was provided at this, the cost of warranty is 1%. And they've clearly mentioned to all of you, what is that they've mentioned? That the cost of warranty is neither included in the direct nor it is included in the indirect cost. They've clearly mentioned you this one. So if they have clearly mentioned to you, students, this particular thing, so our next question, which is that, what is that you need to do? Will you reduce 1%? What is the cost of the warranty from 70,000? 1% of this thing, will you reduce it from 70,000? You can't do that, because this cost of warranty is 1%. This is about the cost. This is about the cost, students. So they are talking about, students, the cost, because in the selling price, what would be loaded is not 1% of the direct cost, which is the cost of warranty. What would be loaded in the selling price is the loaded cost. What is the loaded cost? After loading the profit margin, because the percentage margin would be loaded on all the entire cost, and all the entire cost will include even the cost of warranty. So what is included in the selling price is the loaded cost. And if it is the loaded cost which is included in the selling price, so you cannot reduce this 1% of the direct cost, which is the cost of warranty, from the selling price. You cannot do that. So what is then the approach to be done? So students, the approach to be done in this case is, you need to, if your selling price is loaded with $70,000, the selling price, which is 70,000 USD, if it is loaded with the warranty cost, then if it is loaded with the warranty factor, your selling price is loaded with the warranty factor. So what you need to do? You need to load your cost also with the warranty factor. Load your cost with the warranty factor. So if you load the cost with the warranty factor, what does it imply, students? It will therefore would mean that the warranty factor has been taken away. So whatever is a warranty factor which is there, that will be taken away. So load it with the warranty factor. It will imply that the warranty factors has been taken away. So one of the way is to either reduce from the warranty factor from the selling price, which has been given to you. But this could be done if I would have been told that what is loaded in the selling price is this percentage of the selling price. So I could easily remove it. But they haven't given us what is loaded in the selling price. Instead, what they have told you is what is the cost of the warranty. And the cost of warranty is not the same what is there in the selling price, because in the selling price, what is what gets included is the loaded cost. Is the loaded cost loaded with what? With the percentage margin. Do we know the percentage margin? And the answer is no. And therefore, in that case, what is the option that we have got? We have got only one option in this case, and that option is, students, to load up the cost. So by loading the cost with the loaded margin, what will happen, students? My warranty factor would be coming out. So my margin now with the loaded cost, compare with the loaded selling price, what will be the case? Loaded with what? With the margin, with the warranty factor. What I will get, students? I will get a margin. Can I say now this margin to be X warranty? And the answer is yes. But if I don't load anything on my cost, I just let the selling price remain loaded without loading the cost, then that margin would be, will that margin will have the warranty factor into it? And the answer is yes. So how do I remove the warranty factor in that margin? In that margin, there are two ways to remove the warranty factor. One is either to remove the warranty from the selling price itself, and by removing it from the selling price, you can directly compare your cost with the selling price X warranty. But to do that, you need to know how much is the warranty margin as a percentage of the selling price, which unfortunately you don't know in this case. So what you know is only what is the percentage of the warranty as the cost, as the cost. So therefore, kindly load your cost. So the loaded cost will be matched with the loaded warranty price, and that will give you then the margin, which is X warranty. That will give you the margin which is X warranty, and that exactly what we have done it over here, students. If you see in this case, the total direct herein, cost of warranty is 1%. So we have added here, we have loaded our cost in the in the unrelated party transaction. So 36,120, students. 36,120 is my loaded cost of unrelated party transaction. Unrelated party transaction, loaded cost. And in that loaded cost, I have got billing per month. This billing per month is come warranty. This billing per month is come warranty. With the billing per month at come warranty, primarily what I will have got now, students, I will have got the margin. Now this margin as a percentage of cost. Please ensure to get the margin as a percentage of cost. So this margin, by the way, 33,380. Can I say this is X warranty margin? Can I say this is an X warranty margin? Yes. Why I say so? Because my selling price is loaded with the warranty factor. My cost is also loaded with the warranty factor. So therefore, I can say safely that what I can say safely, students, in this case, that the margin which I'm getting it over here, this margin is X warranty. And with the X warranty margin, students, with the X warranty margin, students, now I can have a percentage, students. Now I can have a percentage on the cost. So 33,880 divided by 36,120. So this is your margin. Can I say this to be X warranty? Can I say this to be an X warranty? Yes. X warranty margin. But the margin on cost. 33,880 divided by 36,000, which is the total cost. Now, what I need to do, I told you, this adjusted margin, this margin, students, this margin you need to load on the total cost of the A transaction. Total cost of the A transaction. The standard cost has been given of direct and indirect. Standard cost has been given of your direct and indirect. And to the standard cost of direct and indirect, please add the interest element. Please add the interest element on the loan. I told you that loan amount financing cost. I am actually in the A transaction. The Indian A is incurring a financing cost. And therefore 250 is the financing cost. So our total cost in the A transaction, total cost in the A transaction is 40,750. And by virtue of this, you will now add on this one 93.80, which is the loaded margin, and that's exactly what it is. Fine, students. Students, one method I'll just tell you about TNMM method, transaction net margin method. In the transaction net margin method, students, what happens is that students, transaction net margin method can be of two types. One is that it can be also considered as a net resale price method, and it can also be considered as a net cost plus method. Net cost plus method. You'll say, sir, what is the difference between the two? Quickly, I'll just let you know the difference between the two. The transaction net margin method can also be considered as a net resale price method, or it can also be considered as a net cost plus method. What exactly it is? For net cost plus method, students, you'll just read the one question which is there. It's a simple question. Okay, it's the simplest of the question. I will just take you through to this particular question of net resale price method. Okay, net resale price method. First, let's look about the net resale price method. What happens, students, is that I purchase the goods. In fact, I purchase the raw material. I process the raw material, and then I resell the final product. Okay. Then there is an unrelated party transaction. This is the unrelated party. So unrelated party, again, you will get a comparable. So primarily you have to attack this transaction. Okay, but here also you are processing. So process is there, and then thereafter there is a resale. So the first step to be done, students, over here is that you need to get the net margin. Students, please see the difference between the resale price method and transaction net margin method. The difference between the two is, students, the difference between the two methods, students, is what? Can you tell me the difference in this particular two method? So the difference in this two methods, students, is this. That in the case of the resale price method, you purchase the goods, and the same goods are resold. Transaction net margin method, you purchase X, you make that X as X plus 2 or X plus 1, and that is what is sold. Please understand the difference in the examination, how to identify whether it is a resale price method or it's a transaction net margin method. It all will depend upon whether X is purchased from the AE and the same X is resold further, or X is purchased from the AE and what is resold is to the customer outside is X plus 1 or X plus 2. If it is the first case, resale price method, second case, transaction net margin method. Okay. Now what changes is this? Be careful. The first step, as you all know, is a net margin. Net margin is the total cost of the unrelated party transaction compared with the resale price. Total cost of the unrelated party transaction compared with the resale price, that will give you the net margin. This net margin, students, now step number 2. You need to adjust this net margin, students. You know with what? This net margin needs to be adjusted with the uncommon factor in the two transaction. The uncommon factor in the two transactions. So what is the uncommon factor? Students, what we used to do in the resale price method last, this needs to be done in the second step itself. So what we used to do in the resale price method, first, whatever was the margin, that margin we never used to adjust. Directly that margin we used to reduce it from the resale price of that AE. At what price at the AE has resold it, to that resale price, we used to reduce the normal margin. And once we used to reduce the normal margin, then whatever is the price that we used to get, from that price, we used to adjust the uncommon factor. In fact, that is what we have done it over here. Earlier question of Bharti telephone. But here what we do, students, So here, students, on the net margin, before you apply above to the price at which the goods are resold by the AE, you will have to adjust this net margin of step number 1 with the uncommon factors. Yes, Lokesh, it is for paper number 7 only. Paper number 7. It is useful for paper number 7. You have to adjust this net margin primarily with this one. Did you all got this one? Please adjust with the uncommon factor. And once you adjust it, what you'll get, friends? You'll get adjusted net margin. This adjusted net margin that you have got, you will reduce it in here. So reduce it, kindly reduce it over here with the reselling price. Once you reduce it with the adjusted net margin, you will come to this particular stage. Once you adjust with this reselling price, you will come at this stage. And once you have come at this stage, students, what will reduce? The further processing cost, the additional processing cost. And once you reduce the additional processing cost, you will get what, students? You will get the ALP. And now the purchase ALP will be compared with the purchase transfer price, and accordingly you will make the transfer pricing adjustment. But again, I am warning to all of you, please keep in mind that the 92.3, what is 92.3? That there should not be any downward adjustment. Nikhil, same thing. Don't worry about this one. You just go with this particular thing. And I'll again put in my Telegram channel 2 revision videos. Many students are asking for overview of model convention for those who would be appearing for 6C. So for that, I'll just put 2 videos for all of you. After the lecture gets over, in my Telegram channel only, 2 videos on the model convention. So you can just go through that particular 2 videos on model convention, and that should be all. Okay, so that will help you all big time. So I'll keep that particular video in my Telegram channel, CA Durgesh Singh. In CA Durgesh Singh Telegram channel, I'm just putting it after this lecture is over. Okay. Now, students, this is what it is. Now, this is which method, by the way? Transaction net margin method. Transaction net margin method, but with what? With the net resale price as the base. Can you see that? With the net resale price as the base. But what about a transaction net margin method with a net cost plus method? Students, this is what it is. ICI has already asked this question. Question number 7. Can you see this question number 7? Students, can you see this question number 7? Please go through this question number 7 in this context. This is the simplest question. It will hardly take you 5 minutes, but you can do it as homework. Okay, this PDF file also I'm putting it in my Telegram channel, CA Durgesh Singh. This is a Telegram channel. Okay, CA Durgesh Singh. Final DT by CA Durgesh Singh, that is the title. Now, students, please ensure to go through this one. You will find this is the same. Now, range concept, students, do you want me to do this range concept? I think all of you are aware. Ascending order you need to do. It is the simplest one. Range concept, students. I think range concept, all of you are clear. Ascending order, you will from low to higher, and then thereafter 35 percentile, 65 percentile, see whether the price falls within the range, isn't it? If not in the range, then take 50% of median. But if the median is a even number, students, if the median is an even number, then you have to take the average of it. Okay, so students, do one thing directly in the context of the, instead of looking into this one, students, question number 8, there is a question which has been given. Directly, students, refer to question number 8 and the theory. Okay, and the theory. Now, students, only one part has not been asked in the question in the exam. This is something which I always threat. This is the only area of transfer pricing which these people haven't targeted at all in the examination. In paper number 7, I am talking about it. Paper number 7. You'll say, sir, what about paper number 6C? Paper number 6C also they have not targeted. So neither in paper 7 or paper 6C. This is the only concept of transfer pricing which is left out by the ICA up till now. Therefore, I'm just making you understand how so you can understand this. Just accept it and then we can move on. Students, what exactly it is? Multi-year data. Students, for multi-year data, 3, if the most appropriate method that you have taken is which method, students? The most appropriate method that you have taken is, in this context, be careful on this part, students. MAM is the cost plus method, the transaction net margin method, or the resale price method. The 3 methods which are cost plus method, transaction net margin method, and the resale price method. Okay, this is the most appropriate method. Where the most appropriate method is the resale price method, cost plus method, transaction net margin method, and the comparable uncontrolled transaction has been identified on the basis of the data. Now, comparable you have got of the current year, comparable, and what, students? And the enterprise undertaking the said in control transaction, just forget this paragraph. The enterprise undertaking has in either or the both of the two financial year immediately preceding the current year undertaken the same or similar transaction. Just I'll explain you students quickly in 1 minute. So here is one of my transaction with the A, and then there are say around say 7 comparables. 7 comparables. Now with the 7 comparables, I have got current year data, current year price data. Also for those comparable, I have got the last 2 years data. At least one. Out of the 2, I need to have one. If I get both, nothing like that. But out of the 2, I at least need one of those comparables. Fine. In that case, students, what I'll do, I will do then the weighted average. I'll do the weighted average. Now, why this weighted average is done, students? Please pay attention. Students, please understand why these 3 methods only is selected first for doing a weighted average. There is a reason for that. Students, in all the 3 methods, whether it is a cost plus method, margin is required. Transaction net margin method, again margin is required. Resale price margin method, again the margin is required. In all these 3 methods, margin is required. Margin is based on 2 factors. Which are those 2 factors? One is the cost, another is the resale price. So these are the 2 factors on which the margin is based, isn't it? And therefore, if you just imagine this, these 3 methods are affected with the 2 variables. Which are those 2 variables? Cost variable and the resale price variable, selling price variable. So if one of the variable goes for a toss, like for example, COVID times are there. So government says that the selling price should not go up. Regulate your price. Even though the cost goes up, don't worry. Selling price should be only at this level. So what happens now? In this case, there is, you can say the cost is high. Selling price, I'm not allowed to go high. In that case, what happens? The margin is not decent in the current year. The current year, if I have to I have to go with the current year margin of this comparable. Will this current year margin of the comparable, will they give me a correct picture? Will the current year, although it is to the unrelated party only, the sales which I'm doing it at a price, but I'm doing it to unrelated party. But it is not because there is an influence that is there because of our relationship. The condition is such that I cannot charge you more. And because of those reasons, what has happened is that my margin is disturbed. And therefore, students, please understand that these 3 methods have got cost as well as selling price. If one of the factor get compromised for any reason whatsoever, then the margin of the comparables is not credible margin. The margin of the comparable is something which cannot be relied upon. And that is the reason why, students, what happens over here is that we have got these margins which are being there, and all these margin, students, what I need to do, I need to then go for weighted. Why weighted average? Because by doing the weighted average, I am reconciling at least to an extent. If 2-3 years data weight is taken, then what happens effectively? Any sort of in between fluctuation, if at all there, any sort of in between fluctuation, if at all it is there, then those fluctuations will get ironed out. Do you all agree to this one, students? Yes. So those fluctuations, students, will get ironed out, and that exactly what they are trying to talk about in this case. Those fluctuation will get ironed out in this case. We'll just say, why not for cup method? Cup method, students, does not work on margin. Cup method always work on the absolute value, like purchase from the AE. So I'm comparing purchase with the another purchase price, or sale to the AE. So accordingly, I'm comparing the sales with the uncontrolled selling price. So in the cup method, there is not margin which is in action. What is in action is the absolute value. And hence for cup method, we are not considering the multi-year data. This is again a very important MCQ question which the ICI has asked. So please keep in mind, ICI has asked an MCQ question in this case, that in which method that the weighted average margin, the multi-year data is not to be taken. Multi-year data is not to be taken. To that the answer is, students, what is the answer? The cup method is the method in which the multi-year data is not to be taken. Is that clear to all of you, students now? All of you are clear with this one? So we are done with this particular part. Now, if you just know how to make a weight, I'll tell you how. So if there are three data students, 3 years data is there. How do we take the weight? Weight is how what? So and the method is the transaction net margin method. Operating cost to the operating profit. So students, what you'll do is that you have all the 3 years operating profit. You have all the 3 years operating profit. So what you do is that take the total of all operating profit, all the 3 years operating profit, take the total, all the 3 years operating cost, take the total, and get the percentage. So in the weighted average that you do in the multi-year data concept is add all the profit divided by all the cost or all the selling price, as the case may be, depending upon which method. If you are following a resale price method, students, if you are following the resale price method, then obviously you will have to add the profit and divide with all the selling price of all the 3 years or 2 years, as the case may be. So you will get that particular margin which has been there. Now, if there are only three comparable students, will you go with the range concept? If there are only three comparables, will you go with the range concept? No. You will take what? You have got three margin. If you have got three ALP margin, in this case, you will go with the arithmetic mean. You will go with the arithmetic mean, and the arithmetic mean is of what? 8.74. The arithmetic mean, the average in this example is 8.74 because there are only three. Now, what is the transaction margin? The transaction margin is at 4.16. The transaction margin is at 4.16. Do you know, friends, what we do? 4.16 into 103%. Why we do 103%? This, whatever is the margin, I do 103%. Why? I enhance by more than 3%. I enhance it by more than 3%, and I check whether my enhanced margin in the international transaction, is it more than the ALP margin? Is it more than the ALP margin? So if I say that yes, sir, my enhanced margin is more than my ALP margin, then in that situation, students, in that particular situation, what is that we will say? We will say that we will not go with the ALP margin. I will go with my enhanced margin by enhancing by more than 3%. But if you say that no, even after enhancing by more than 3% of that particular transfer price margin, still it is lower as compared to the ALP margin, then I will go with my ALP margin. So if you see in this particular question, what happens is that, students, 8.74, which is there in this context. So you just have 4.17, just do 103%, you will still be in 4%. You will not even cross 5%. So obviously this is very high. The ALP margin is very high. And therefore, by doing 4.16 into 3%, you still are at 4.28%. So I will not go with this. I will take up the ALP margin. So in that case, students, ALP margin is this. So this is your cost. This is your ALP margin. This should be your selling price, and accordingly, this is your transfer pricing adjustment. This is your transfer pricing adjustment. So so students, this is precisely how it has to be considered in this context. I hope that all of you are clear with this one now. Secondary adjustment, students, I think all of you are clear with this one. Only one couple of particular points. MCQs are the critical one over here. Students, this MCQ, which has been there, this is one of the beautiful MCQ of the ICI case study. This case study actually covers up everything. Case study actually covers up everything. So just very quickly, let's revise this particular case study. Is X and Y a socio enterprise? If so, why? Now, X and Y are the international transaction. So if you see over here, X private limited, Y private limited is a private company of USA and its income chart. Both are promoted by Mr. Ayush, who holds 30% equity in both of them. Remember, 26% is required in both. If there's a common parent, and this common parent is having 26% or above, this common parent, 92A has got 1 point, which says that if it has got a common parent which is 26% or above, then in that case, both X and Y will become an AE. So therefore, in this case, they are indeed an AE because of this very reason. Okay. So because of this very reason, they have got a common parent. Common parent means anyone who is having 26% and above. Then thereafter, friends, if you see very carefully, the loan was advanced by Y to X on 1st July 2020 in rupee terms and carries 6.5% per annum rate of interest. For the borrower with similar risk profile who are not associated with Y, advance of 4% per annum. Fine. First, just check the loan part. Students, the loan which has been given from Y, 620, I'll compare with what? With the total loan or the total asset? Loan will have to be considered vis-a-vis this or vis-a-vis the total loan. Will I be comparing with 780 or will I be comparing 1200 in this case? I will be comparing with the total asset. And for the total asset, it is what? It is more than or equal to 51%. So is it more than or equal to 51%? To that, the answer is yes. And because it is more than or equal to 51%, students, therefore we will say what? That yes, because of this more than or equal to 51% in this scenario, students, we shall say that in this context. And this is how the things has to be looked upon. Coming to the second one, student. What is the amount of the primary adjustment? So that difference of the interest, just directly quickly, students, we will directly do the solution. Difference of the interest rate on the loan. This is the primary adjustment. Now be careful. This is the beauty of the question. This is the beauty of the question. 9 by 12. And this is where maximum students will go wrong. Because when the loan was given was on 1st of July and people would have taken for 12 months. Did you all got this one? Where you people would have gone wrong? Fine. So students, just be very careful. It's 9 by 12 because even the 12-month option is given, students. ICI is smart to give you that 12-month option also. They want you to be in that trap. Anyways, question number 3. If X has accepted the primary adjustment made by the assessing officer on 31st of March, what should X do if it does not want to treat the excess money as a deemed advance and include interest on the same in its total income? What should X do? Now, this is option. If it does not want to treat the excess money as deemed advance and include the interest on the income. Now, there are many options. First, the excess money which is available has to be repatriated to India within 90 days from the due date of filing of the return. Filing of the return, is this correct option? What is the relevant date, students? What is the relevant date here? 90 days from the date of file. Is it a suo motu case? If this would have been a suo motu case, then yes, it would have been 90 days from the date of filing of the return. But is it a suo motu case? And the answer is no. And because it is not a suo motu case, students, therefore it would be on the date when the order which is accepted by the SSE has been passed from that date within 90 days. So therefore 2 is the correct option. 2 is the correct option. Third one, X has to pay additional income tax of 20 on the excess money. Yes, even this is the option. So in that particular case, students, in this particular case, this is also correct. And the last one, interest has to be paid up to the date of the payment of additional tax. Yes, so obviously, students, if the excess, he takes the additional tax payment, students, if he wants to make the payment of additional tax, obviously till from expiry of 90 days, from the expiry of 90 days, from the relevant date till the date of payment of the additional tax, whether the interest income, will it form part of the total income? Please tell me in this case, students. Whether the interest income, will it form part of the total income? And the answer is yes. So in this situation, the interest income will form part of the total income. That secondary adjustment will be done. So the correct answer, students, would be that second is that either you bring it within 90 days or you take the option of payment of the additional tax. But once you take the option of payment of the additional tax, please be mindful of the fact that from the relevant date till the date of, students, till the date of payment of the additional tax, whatever is the interest amount, that will be a part of your total income. So this is a correct answer, and that is how the things has to be looked upon. Point number 4. If X has accepted the primary adjustment made by the assessing officer on 31st of March 2022 and the excess money has not been repatriated into India up to 31st of March 2023, what would be the consequence if X has not opted to pay additional income tax? Assume that SBI 1-year marginal cost of lending rate is 10%, and this one on 1st April. Now, by the way, students, in this case, so if they have not, so the interest will be there from the relevant date. Will it be from 1st April 2022? Or will it be from 1st of April 2023? Will it be from the first day of April 2022 or will it be from first day of April 2023, students? So obviously, students, from the first day of the previous year. So for the first day of the previous year, the interest, which is the LIBOR plus 3.25%, 3%, or SBI plus 3.25%. This, students, always be careful. This always be careful, students. Which is what, students? That the base rate would be as on the, whether it is LIBOR or whether it is SBI, the base rate would be as on the first day of the previous year. First day of the previous year. And the first day of the previous year, when the interest will begin, would be 1st April 2022. The first day of the previous year when the interest will begin, because this is a relevant date. Now from the next date, the interest will begin. And that next day happens to be 1st April 2022. So the previous year happens to be April 2022. In that first day of the previous year, what is the base rate? What is the base rate? So the base rate in this particular case, students, happens to be, you can see for yourself, the base rate over here, students, happens to be, see for yourself, which is to be 10%. 10%, students. So 10% plus the SBI, it is 3.25. 3.25. What factors is relevant in determining whether the penalty under 270A will be leviable in respect of primary adjustment to X total income? Now, students, exactly point number D. Since X has not reported a transaction as a, students, here in this question, can you see this one? Here in the question, this is what they have said. See, read this one. X has maintained such information and documents in respect of the international transaction and as prescribed, but has not reported the transaction. Failure to report will be a misreporting. Students, failure to report will be a misreporting in this case. And that is what is there in section 270A. Failure to report the transaction is equal to misreporting, and that exactly is the point, students. And last but not the least, here in this context, in the scenario given above, what would be the situation or amount of application of transfer pricing provision if X, the Indian company, would have been the lender and Y, the US company, would be the borrower? Now, if it is a reverse case, 92.3 will come into picture. Then it would mean that I have given you at a higher price, whereas I should have charged you a lower amount, isn't it? So therefore, I have booked a higher profit. If I have booked a higher profit, will there would be a transfer pricing adjustment? And the answer is no. Downward adjustment will come into play. Downward adjustment will come into play. Students, now this APA, I think all of you are, the theory is there of the APA, students. I think all of you are clear with this theory of APA, or you want me to run through this one? Quickly tell me about the APA theory and the transfer pricing assessment. APA theory and the transfer pricing assessment. Quickly. So students, all the practical, now one practical on the thin capitalization, students, I'll just deal with this one. This is also one of the beautiful questions of the ICA. Let us go through this particular part. Case 32. On 1st April 2020, UI Limited, an Indian company, borrowed 50 crores at 9.5% from MINC. A US entity, thereby increasing its total borrowing to 65 crores. The said loan is guaranteed by HINC. Another US entity, the place of effective management of both MINC. And HINC. In the USA. The total asset of UI is how much? Is 180 crores. Students, please understand here. Total asset. I was telling you about this particular thing only. That please here the guarantor is there. This question only at the start of it, I was telling you this one only. The said loan is guaranteed by HINC. Students, UI Limited is an Indian company, borrowed 50 crores at 9.5% from MINC dot, a US entity, thereby increasing its total borrowing to 65 crores. Students, 50 crores, will it be compared with 65 crores? What this particular borrowing, the total borrowing, this total borrowing relevance is for the said loan is guaranteed by so therefore to decide whether the guarantor he has guaranteed 50 crores, total borrowing is 65. So is the guarantee more than or equal to 10%? Is the guarantee more than or equal to 10%? And the answer is yes. So the guarantor HINC dot and the borrower UI Limited HINC dot and UI Limited, the borrower, the guarantor HINC dot and the borrower UI Limited, can they be considered to be an associate enterprise? And the answer is yes. Now coming to the second particular part, students, in this context. Coming to the second particular part in this context. Here, students, if you see, the place of effective management of both MINC dot and HINC dot is in USA. Good, because both of them are associate, both of them are non-resident. The total asset of UI Limited, students, is 180 crores. Now, please pay attention here. The borrowing is 50 crores. Whether UI Limited and MINC dot, UI Limited and MINC dot, UI and MINC dot, whether both of them are A, HINC dot and UI Limited, both of them are A. I have already proved it through the guarantor and this the loan. Guarantor loan and total loan. Through that they are A. But what about UI and MINC dot? Both of them, can they be considered to be an A? And the answer is no. Why is it? The answer is no, students. 50 crores. Can you see that? 50 crores would be compared with what? With the total asset. The loan would be compared with my total asset. And whether the loan, is it vis-a-vis the total asset of UI Limited? What loan I have taken from MINC dot versus my total asset, is that loan, is it more than or equal to 51%? And the answer is no. Since the loan is not more than or equal to 51%, therefore in that situation, we will say what? That they are not an A. That, students, they are not an A. These two are not an A. Next. UI Limited has imported turbo equipment worth 30 crores from HINC dot. Import duty of 4.5 crores on the same was paid by UI Limited. The equipment was sold to T Limited for rupees 40 crores. Normal GP margin of UI Limited in similar and controlled transaction is 50%. Net profit of UI Limited for AY 21-22 was 8 crores after debiting interest 6 crores, out of which 1.25 crores pertaining to the local borrowing. So the A borrowing is how much? 4 out of 6 minus for this thing. So it is 4.75 is the A borrowing. Now in that case, depreciation is at 2.5%, 2.5 crores and income taxes of 1.5 crores. From the following information given above, choose the most appropriate answer to the following questions. So what is the most appropriate questions? Question number 1. What is the amount of interest to be allowed in the computation of total income of UI Limited for AY 21-22? If AY 2021, there is an interest expenditure disallowed to the extent of 4 crores. So interest expenditure disallowed to the extent of 4 crores. So this, whatever is disallowed in the extent of 4 crores, will it be added in the current year? Yes. Current year interest is how much? 4.75. Now please understand what is the amount of interest to be allowed in computing the total income. Now, please understand one thing. 1.25, is it already allowed? This is such a beautiful question, students. They are asking you the amount of the interest to be allowed. And in the interest to be allowed, this 1.25 crores local borrowing, is it already allowed interest? Yes. Only one way it could have been disallowed if they would have said that it has not been paid to the bank. Then 43B would have come into picture, and then in that case it would have been disallowed. But can I say this 1.25 is allowed? Yes. That is always there. Now, apart from that, balance is 4.75 plus 4 crore. So the total to be recorded in the current year is how much? 8.75 of the AE interest. 8.75 crores. 30% of EBITDA, students. 30% of this is how much? 2.4. 30%. 2.4 crores. So this is after debiting. After debiting interest, so you have to add back. Students, you have to add back. So I'll just directly see the calculation. Excess interest. So this is, I think, EBITDA is 50 crores. This is after debit. So earning before. Again, this is a mistake that we can easily do. This is after debiting. So I have to take it before. So 8 plus 4.75. So 8 plus 6 plus 2.5 plus 1.5. So all added together and then you take the 30% in this context. So in this situation, 30% of this 18 crores. 13% of 18 crores comes to 5.4. 5.4 students, which has been there. 5.4 is the maximum limit. Maximum limit is how much? 5.4. So how much primary interest expenditure is allowed as per 30? Upper limit is 5.4 crores. 30% of 18 crores. So this is what is allowed, isn't it? Now in this case, 5.4 is allowed. How much is the current year threshold? 4.75, which we've calculated. 4.75 the current year. The current year. Now this is the current year. What about the last year, students? How much last year? How this calculation is done? I'll directly come to this one rather than getting into this. 4.75. 4.75 students. This question. Last year, 0.65 would be allowed. 0.65 has been allowed of the last year. 0.65 of the last year has been allowed. That is the excess portion. 4.75 of the current year is also allowed. Where is the 1.5 came from? $1.5 students. Any idea on this one? Just do students 9.5 crores into this total borrowing. No, this 1.5, this is the incorrect one. This is 1.25. See the total? This is what it is. $4.75 0.65, 1.25, 6.0. This is incorrect. This is such a headache. 1.25. Got it, students? This is 1.5 is not a correct one. Now, I hope that all of you got to know from where this 0.65 has come. 0.65 is the excess. 5.4 is the upper limit. My current year is 4.75. Last year 4 is there. So out of 4, can I take entire 4? No. I can only take from last year 0.65. And the local interest which I paid, which is anyways allowed, 1.25. Okay. So therefore, total interest expenditure that would be allowed. Total interest expenditure that would be allowed, students, would be how much? Interest expenditure that would be allowed would be how much, students? This is what it is. Is that clear to all of you, students? Total interest expenditure. So this is all the things we'll upon. So the question is, how much is the interest to be allowed? That's a beautiful question. Interest would be allowed is this amount. Quickly now, students, question number 2. This is a simple one. The transfer pricing adjustment for the arm's length purchase price to be made in the computation of total income of UI Limited for AY 21-22 would be what? The transfer pricing adjustment for the arm's length purchase price to be made in the computation of total income. So what would be this thing, students? This is a simple one. Purchase price is this much. Okay. Now, how much should have been purchase price? 32 crores. How do you come to know this is 30 crores? You have to apply which margin, students? Resale price margin, I think. UI Limited imported turbo equipment worth of 30 crores from H. Import duty is 4.4 crores on the same was paid by UI Limited. The equipment was sold to T Limited for 40 crores. Normal GP margin of UI Limited in the similar control transaction 20%. So 20% minus, so normal resale price margin is this. 20% remove this for 40 crores. So that is 32. So 32 is there. 32 would be compared with the purchase price, 30 in this context. 34.5, sorry. There is a 4.5 which has been there already in this context. So therefore, in this situation, 32. So 32 would be compared with 34.5. And therefore, in this situation, 2.5. 2.5 is the final transfer pricing adjustment to be made. 2.5 is the final transfer pricing adjustment to be made. So this is what is the TP adjustment in this context, which has been there in this regard. This is what is a TP adjustment to be made in this context, in this regard. So students, please be very careful about this part, which is about 2.5 crores. Third question number 3. UI Limited repatriated the excess money on 31st of March. What will be the interest income that will be added to its total income for assessment year 22-23 if SBI 1-year marginal lending rate is 11.25 on 1st April 2021 and 10.25 on 1st April 2022. So 1st April 2021 and 1st April 2022. Assume the UI Limited suo moto made the primary adjustment in its books of accounts and filed its return for AY 21-22 on 30th of September. Students, be careful, 30th of September. And they want to ask you a question, and be careful about the question. Question is about what? Here, what will be the interest income that will be added for AY 22-23, which means previous year 21-22. Okay, and they have repatriated the excess money over here, 31st of March 2022. Now, if it is a suo moto case, plus 90 days from this date. Plus 90 days means December, Jan, Feb. But you have repatriated on March. So can I say therefore April, December, Jan, Feb and March, 4 months. So you can take 4 by 12. But here ICI has gone with the number of days calculation. But to avoid this kind of a headache, please go with 4 by 12, 1/3. So 1/3 into the 11.25%. 1/3 into 11.25%, which is as on the first day of the previous year. And the first day of the previous year happens to be 1st April 2021. Isn't it? So therefore, 11.25 into this one. So if you do this, you will not get the same answer here. Students, you will not get the same answer, but you will be near to this one. You will be very close to this one. So if you see over here, okay, 11.25 plus the base rate, SBI rate, so 14.5. So 14.5. So they have gone with the number of days concept. But don't do this, it will take a lot of time. If you take one third also, that's 4 by 12. The way we have discussed, one third. So here they get 12 lakhs. And one third when you do 4 by 12, student, the 4 by 12 is not exactly 12 lakhs, but it is very near to 12 lakhs. Okay, and you will come to know that other options are very far stretched, 11 lakh, 18,000, 9 lakh, 32, and 8 lakh, 14,000. So you will come to know that, yeah, this is the correct answer. This is how you should be trying to put across. And this is the best particular MCQ which has been there, expected case study, students. Again, very important case study. UI Limited decides not to repatriate the excess money and instead pay additional income tax on the entire excess money. Then what will be the additional amount of the income tax? So 20.9664% on the excess money. That the difference between 34, we have done this one, 2.5 crores. The primary adjustment, excess money is what? The difference between the transfer price and the ALP, which is 2.5 crores. On this one, this is the answer. If UI Limited decides to pay additional income tax on the entire excess money on 15th of March, should interest be calculated and added to its total income? Yes, why not? Because in that case, suo motu it was. So suo motu it was, so 30th of November 2011 only. This is a relevant date. From this date to 15th of March, the interest will be calculated. Isn't it? So therefore, from 1st to 15th March, so 105 days. And accordingly, students, in this context, 14.5% for 105 days, same thing. Okay, so this is the answer. So 104 is the answer in this case. In addition to the facts given in the case scenario, assuming that what? Which of the following are associate enterprise or deemed AE? We have already considered, students. Who are the associate enterprise and deemed AE? Here one is the guarantor of UI Limited. So guarantor of UI Limited, M-I-N-C dot is not the one. We have already ruled out M-I-N-C dot. H-I-N-C dot is there. Okay, now K-I-N-C dot. You'll say, sir, who is K-I-N-C dot? K-I-N-C dot is with whom the transaction has been undertaken, student. The K-I-N-C dot, which they have said it in this regard. This question is not complete, actually, friends. Okay, this is fun. No, you have to see from here only. So I was saying from this question, actually, K-I-N-C dot information has to be taken from here. In addition to the facts given in the case scenario, assuming that, now this has to be assumed. 23rd of August 2020, UI Limited has entered into an agreement on sale of Turbo Limited equipment with Y Limited, an Indian company not related to UI Limited, which is not related to UI Limited, students. Fine. So it is unrelated party with whom transaction has been done. But students, before that, 21st of August 2020, Y Limited has already entered into an agreement. Y Limited, students, which is the unrelated party, has already entered into agreement on 21st of August for sale of the same goods to K-I-N-C dot unrelated to Y Limited, a UK entity. Here, students. Now, if you see UI and K-I-N-C dot, both of them are A, 28 enterprise holding. So UI and K-I-N-C dot, both of them are A. Will you agree to this one? UI and K-I-N-C dot, both of them are A. Yes, both of them are A. And in that situation, students, we can say that K-I-N-C dot and UI will be considered to be an A enterprise holding. What about Y Limited? They are deemed international transaction. That is what I told you. At the start of the class only, I taught you this one, the concept of deemed international transaction. That is what they've employed here. That is it, students. So this covers up this particular question. Now, for the remaining this MCQ, which are being there herein, just go through this MCQ now. Students, if possible, quickly run through this MCQ. The answer is given, and this is only the MCQ. This is not an integrated case study. So this remaining is your homework now, students, herein. Now, you will say, sir, what about the theory which you have to do? So, students, if you want to skip the theory also, you can skip it. Just do right now only this MCQ and just you are secure. I'll put a video on APA. Again, a recorded video on APA. You don't do this one. I'll just do it tomorrow and I'll put the recording video of 30 minutes. If I do recording of theory, it will take me 30 minutes. APA, thereafter the documentation of country by country reporting, and then thereafter finally the dispute resolution panel, DRP, and the penalty. So this theory, I'll just put it for all of you. Okay, 30 minutes video would be there. That you can see day after tomorrow. Right now, what you need to do, students? Right now, 2 questions. One is that question which was there. So immediately, students, just finish off this particular question. This one. I put the PDF file in the group, in the WhatsApp group here in the Telegram channel. So this ABC India Private Limited and ZNC dot, this particular MCQ is what you will do it immediately. And just you see the solution. You can just question and answer because it's an MCQ. It's not an integrated case study. Integrated case study we did just now. This question and the second question is that one practical which was there. I think that I've already have done this one. Only one, the ALP part is what I gave it to all of you about this one. Chetan Private Limited. So only this part. This up to the rest of it we have already done this. 2 questions, students. Just do that one. So do that now. The live lecture, students. I will see you for the live class. Students, I'm going to see you on immediately after ISCA paper. I'll meet you on that point from 6:30. I'm going to meet you. Okay, 6:30 to 7. I'll have one video on the threshold part, students. Okay, and the second one, students. If you see from the second one which has been there is about the TDS TCS advanced tax for 2 hours. We'll finish it off from 7 to 9. Okay, and after that, whichever area that you want me to do, you can do it. Fine. Just this theory, half an hour only. Now again, I'm repeating from NR taxation part A and part B. Those who are doing in YouTube, you can see there's a description box. 3 videos you can see. If you want, you can just wrap it up quickly. One particular NR taxation, maybe part B tonight. Part B, you can do it tonight, friends, if possible, or else you can just skip it and you can do it on that immediately after this study. That is what could be the strategy. I'll see you then, students. Good night to all of you. Take care. Study hard and just check my Telegram channel now. I'm putting for paper 6C, Ashwini. I'm going to put for paper number 6C, model convention video. Model convention video is what I'm going to put it right now. Okay, the Telegram channel, you can see all of you. Students, model convention video, OECD, that chapter of paper 6C, that 2 videos I'm going to put it. So all the students can see that. Okay, but kindly see that model convention video only after doing these 2 questions. One is this MCQ, which I've just told you, ABC, and the second one is Chetan. Okay, see you then, students. Good night to all of you and all the best. Do well, students. I'll be in touch with all of you.